Hello and welcome. I'm Suyash Maheshwari and you are watching In Your Interest. And what's more in your interest than your money and finances at a time when the markets are choppy and we are seeing strong moves pretty much on a daily basis. And lo and behold, after a day of heavy selling where headliners gave away 1.5%, the markets bounced back and they bounced back in style on Friday to end about 1% higher. Now at close, Nifty was up nearly 0.91% at 24,131 mark, and that point is particularly crucial because remember in the morning we had mentioned that 24,125 would be the first level to take out for Nifty, and we have closed above it, marginally above it, but a close above it nonetheless. So that would add some bit of a confidence to the market. If you look at Sensex, it traded similarly. It was up almost 1%. Could not make it to 80,000, but we are just about 200 points short of it. 79,802 is where we sit on the Sensex. Mid cap and small caps, the real drivers of the market in this recovery, they continue to move higher, although not at the same pace as the headliners today, but good to see strong returns over there. 0.16%. Nifty mid cap was up about 0.16% at 56,392, just short of 8 points short of 56,400 sort of levels. And the small cap index, I mean, that continues to remain a very strong pocket for the market. It was up by about 0.75% at 18,650 levels. Also, I think what the investors would really like is that fall in India VIX. The fear gauge was down about 5%, more than 5% in fact, and we are back below the 15 mark. In fact, we are at the lowest levels on India VIX, since early November. Now, for the week, Nifty has ended about 1% higher and it's now on a 2-week gaining streak. Now, let's also look at some of the sectors that were driving this rally higher, and pretty much all of them ended in the green. PSU banks, realties, okay, some bit of a profit booking there, but pharma stocks led today's charge. And remember, in this, this sort of a pullback that we were seeing since start of Monday, pharma stocks, which by the way had not taken much of a hit in this crash, they were really, sort of consolidating and sort of seeing intermittent selling. Today, good to see pharma stocks bounce back. They were up by about 2.35%. Auto stocks was, was another sector that participated in this rally, and so did IT. The auto stocks ended about 1% higher. IT pack ended about 0.41% higher. Now, let's talk about the factors that are driving the markets higher. First, it's attractive valuations after this sharp correction that we witnessed in the last couple of months. Now, the recent correction in Indian equities has made valuations more appealing for investors, encouraging selective buying. Now, analysts note that the Nifty 50 and Sensex, which had dropped nearly 8% from their September highs, are now at a more reasonable level. So, Nifty's price to earning or PE ratio, which peaked at 25.8 in early October, has moderated to about 21 times, aligning closer to its 1-year average. Another factor driving the markets higher and rather supporting the market in this big crash that we witnessed in the last couple of months was domestic buying. Domestic institutional buyers have stepped up, countering foreign outflows and reinforcing confidence in India's growth story. Analysts highlight renewed buying interest from domestic investors, underpinned by a strong structural trend and steady SIP inflows. Another factor, the factor number 3, broad-based sectoral gains. Now, today's rally saw gains across pharma, healthcare, IT, auto, and even infrastructure stocks. Pharma stocks surged the most, with Sun Pharma and Cipla leading the charge, while IT and auto rebounded from recent losses. Heavyweights like Bharti Airtel and Reliance Industries added significant momentum as well. But the question remains, can the market sustain on this momentum, or will we see, will the intermittent bounces that we are seeing are just that, a short pullback, which can't be trusted, by the way? To answer this and more, we have two very special guests joining us on the show. Mr. Sudip Bandyopadhyay, Group Chairman at Inditrade Capital, and Avinash Gorakshakar, Director of Research at Profitmart Securities. Now, Sudip, I'll start with you first. The markets, they are seeing quite strong moves, on either side. Pretty much on a daily basis, we see a day of 1% gains and a day of 1% loss. So what are you making from a holistic level? What are you making of today's strong up move?
Well, Suyash, I think we have to be prepared for the volatility. The incoming administration in US very clearly believes in transactional policy making. And I think we will have to live with this for the next 4 years. There are a whole lot of statements, whole lot of supposedly policy announcements coming from the incoming administration, and that is creating significant volatility not only in US but global markets, including India. I think we have to live with this. Also, we have to remember that FIIs continue to sell in Indian market intermittently, and this again is creating instability. To my mind, I think Indian markets, after reaching a certain level, was poised for correction, and we are seeing that correction. There has to be some kind of correction which was bound to happen, and I think these instability, these policy statements, these kind of FII selling is leading to that correction, which I think is in a way good for Indian markets, and a consolidation at a slightly lower level, which is what we are seeing hovering around that 24,000 levels. I think it is good for the long-term health of the market. But yes, in the short term, we have to be prepared for this kind of volatility and this kind of swings.
All right, Avinash, let me come to you. The markets, they have fallen by about 8% from the peaks. We are seeing some bit of a pullback, but valuations-wise, I mean, are we in that reasonable territory now?
Yeah, I think if you look at the broader market, I think there are many companies, from the mid cap, from the small cap space, which are definitely looking attractive. I think, in this market, rather than looking at the broader indices, it would make a better strategy to actually look at the broader market and, concentrate on a stock specific level. Because clearly we feel that, I think the markets have come down largely because of the FI selling. In fact, yesterday's number was alarmingly very large. So, that, and plus the monthly expiry. So I think that, made the market correct significantly yesterday. Today, I think there's been a bounce back, but I think even today in the broader market, there are many opportunities across sectors where, the Q2 numbers have been decent. The management commentary has been good. And I think, the second half is going to be equally good for such companies. So I think, you got to now pick and choose, although it's not going to be easy money now from onwards. But yes, I think you're going to get the benefit of valuations. And we have been telling our clients to selectively get into some quality mid cap, small cap companies where we feel that the third quarter and the rest part of the year should be equally good. So I think, it's not that the indices are down, so there's no buying opportunity. So I think it's going to be stock specific, Suresh. And I think this is a time where I think you need to do a little bit of cherry picking to get the right alpha, over the next, say, 6 to 12 months.
All right, Sudip, let me take this question to you as well. I mean, Avinash says that he has been, asking clients to park their money in certain pockets of the market. What are your clients asking you? Are they jittery at this moment, considering that the markets are everywhere? I mean, we are seeing strong moves on either side, as we had discussed. What is their sentiment? Are they asking you where to invest, or are they talking about profit booking at these levels?
Well, my friend Avinash is an expert in these things, these matters. I still remember fondly the time we used to work together. But I'll tell you something, my clients, as far as by and large investors are concerned, obviously these kind of correction, sharp correction does lead to nervousness. Everybody is kind of wondering whether this correction is going to be deeper. And also, on the same breath, they're also asking whether there are opportunities of stock picking now. So, it's a kind of a mixed bag, because people have made money over the last couple of years, and they have started believing in the power of market in compounding their income. So they're still not afraid of the market. They still don't want to run away from the market. But yes, they are concerned. That's the general sentiment, if you ask me. Of course, as far as we are concerned, we believe what Avinash is mentioning, that there are value in pockets. We have to be careful in picking stocks. But to my mind, the next 1 year is going to be stock pickers market. It's not going to be a rally in the index the way we had seen in the past couple of years. We have to be careful in selecting stocks. But believe me, there are enough and more opportunities even in today's Indian market.
And Avinash, Sudip mentioned that investors are getting smarter now. They are looking at staying in the market and really riding that way, because Indian investors, they have traditionally favored fixed income investments, and since COVID, there seems to be a trend shift of sorts where a lot of these new age investors, I mean, we have seen a complete swing in the pendulum where 100% of their portfolios are being allocated to equities. Avinash, do you think that is particularly risky in case we see a black swan sort of an event?
No, I think, Suash, I think let's not be very negative on the markets. I think, see, these kind of corrections are something which are very normal, and we have seen markets for a very long time. So, we have not seen investors seeing a big correction. So, basically, just to give you a simple example, investors who have entered post-COVID have always seen a trending market. So, I think, there are some set of investors who get jittery about the volatility in the markets, but I think experienced investors who basically are long term wealth creation kind of investors ultimately know that it's going to be the data point and the performance of the company which is going to drive value. So I think these kind of temporary corrections should give an opportunity for investors to get in. I think, see, India is a growing economy. Today we have the Q2 GDP data. I think people are quite disappointed on the numbers, but my sense says that the third quarter or maybe the fourth quarter would be slightly better. So I think just looking at one number, you can't write off a particular kind of country. And my sense is that, liquidity is the biggest culprit now, which is been the main reason why the markets are underperforming. So post 20th January, when Donald Trump takes over office in US, I think you're going to see a lot of changes happening. Mr. Trump is well known for his tweets. And I think you're going to see a lot of positive commentary coming in from Mr. Trump for India. So I know that is definitely could be a turning point for India. I think in terms of the FI outflows, in terms of the policy announcements. So I think, it's a wait and watch. December is unlikely to be any the great month because as everyone is aware, post 15 December, most of the FIs go out for vacations. So I think this is going to be a slightly, market where January, I think people will probably wait for a Santa rally, which is, could be a little later rally, and obviously that could be the turning point. So I think markets are definitely going to be trending upwards, possibly based on these factors.
Now, Mr. Bandyopadhyay, Avinash touched on the Q2 GDP numbers. I mean, they came after the market hours. Below expectations. I think the lowest estimates were accounting for about a 6.2% year-on-year rise. GDP numbers for Q2, the GDP growth rate was about 5.4%. Manufacturing has slowed down considerably. Consumption is lacking, especially in the urban sector. Do you think that will hit the sentiment or dampen the market mood come Monday?
Definitely, it will have a sentimental impact on the market, but I don't think it's going to be a deep impact. What actually, Swash, it will have is a significant pressure on RBI to look at interest rates. It's a very, very tricky situation for RBI. On the one hand, US Fed is cutting rates. On the other hand, you have the growth slowing down significantly. And while all this is happening, inflation is very high because of food inflation. So it's a very tricky situation for RBI. The economy demands a rate cut, but prudence and inflation probably is hinting at not doing that. So I'll be watching what RBI does, in early December as far as rates are concerned. The conventional wisdom was that February they will look at a rate cut, but not in December. But these GDP numbers definitely puts incremental pressure on RBI to do something about the interest rates. As far as the numbers are concerned, I also agree with Avinash that Q3 and Q4 should be better. We all know Q2 was, really, not things were not working for multiple reasons, and that's pretty much getting reflected in the numbers which are coming out. Festive season and Q4 normally are good quarters for Indian economy and Indian markets. Let's see how the numbers pan out. My belief is numbers will improve, but a couple of things need to happen. One, the food inflation needs to come down for the economy to really progress. And two, the urban consumption somehow needs a boost.
Right. Now, Avinash, Sudip thinks RBI is not going to go for a rate cut. What is your opinion? And he's right in pointing out that, they need to do something at this point, right? The GDP growth rate is at almost a 2-year low, 7-quarter low, 7-quarter low, and inflation keeps climbing. And the thing about inflation is we keep on focusing on food inflation. Do you think it would, and food prices are super volatile, especially, during these months or during the months of Q2. Do you think it is actually prudent to look at food inflation, or would you think that RBI would be better off focusing on core inflation at this point?
Well, I think, see, food inflation is a very important component in the WPI, and I think my sense is that RBI may looking at a neutral stance as of now. Of course, what commentary comes from the governor is very important, but I think they would obviously look at more data points. I think currently global geopolitical situation is getting little bad. I think you're hearing that Russia is putting more pressure on Ukraine, and if that happens, then I think again globally crude prices could go up. So I think apart from the food inflation, the other macro factors, the global macro factors are also going to be very important. And I think what happens on the US Fed front side, I think there also bond yields have touched high. So obviously to expect rate cuts there also is a difficult kind of a proposition. But my sense is we'll have to wait till maybe another couple of months, Suresh. A rate cut may not happen immediately because RBI has already warned that inflation is not up to their comfort levels. And now with this slow GDP data, I mean, we'll have to retrospect the numbers as to what is the real issue. My sense is that third quarter should be reasonably good because festive demand has been very strong. And I think that should be reflected into better corporate numbers for Q3. So I think let's wait and watch. But in this policy, probably on the 3rd and the 4th of December, I don't think you're going to see any big rate cut change. The commentary would be more important to watch out.
The commentary would be more important. Both our experts don't believe that there would be a rate cut, but I want to stay on what what RBI does and what Fed does. And Sudip, if Fed does go for a rate cut, let's say the consensus view is that they will go for another 25 basis point rate cut. So there would be so they would have cut actually interest rates by about 1%. We have not gone for that monetary easing just yet, and that does make our market much more attractive to foreign institutional investors. Do you think perhaps is that something that RBI may be also thinking, and could that also bring in some of that foreign institutional investors who have been incessantly selling all through the last couple of months?
No, I don't think so. I think if you look at the returns, US market has given fantastic returns. And if you now calculate, they have given better returns than even India. And look, the global investors are very comfortable investing in US. Why should they invest in an emerging market which doesn't match even the returns what US market is giving? So it's very difficult to assume that by keeping interest rates high, we will be able to attract incremental liquidity. I think that is not going to work out. It has to, the way I look at triggers, I think Avinash touched upon it. The Trump administration will take a lot of policy decisions, which I also strongly believe will favor India. May not be directly, indirectly. Imposing higher tariff on Chinese goods will automatically favor Indian goods. So Indian exporters will benefit and things like that. These are the things which will make Indian companies more attractive in the eyes of global investors. And that's when money will start moving into India, not because we are keeping interest rates high.
All right. So tariffs, if we see further tariffs on China, that makes Indian markets more attractive for foreign institutional investors. But Avinash, so far 2024 particularly hasn't been a stellar year for Indian stock markets. I mean, from a historical perspective, beyond geopolitical tensions, domestic factors have also added to this pressure. Now, Q2 numbers, as you also mentioned, were sort of underwhelming. Management guidance has been far from reassuring. Also, GDP numbers that came in today, they are not inspiring any confidence as well. Like, looking ahead, what are your expectations for 2025? Do you see better times on the horizon?
No, I think, see, clearly, one thing is very clear, Suresh, that easy money is now, the game is completely over. I think investors who made easy money should now realize that they have to be very selective about their investment strategy. And I think even if they assume that they get 15 to 20% returns over the next, say, 12 months, I think that should be a very attractive kind of proposition. I think broadly, the broader market can offer better alpha opportunities. But I think, yes, you'll have to wait and give in some time. I think because quarter 3 will definitely be good, but you cannot expect the markets to get re-rated unless the FI selling is, subsides. And today also, I was reading the FI data. Today also about 4,000 crores plus of FI selling has happened. So I think despite the fact that markets have gone up today, FIs continue to sell. So I think, my guess is that 24, 25, I mean 25, sorry, is going to be a year where I think stock picking and selective investment is going to pay a big reward. I think the broader index is not going to give any big return. So it's going to be a little more hard work, and where patience and conviction has to be inbuilt with investors. So I think, that is the most important thing. Markets are going to obviously play to the tune, but definitely I think longer term money can be made. Maybe in the near term, it's going to be a little painful period.
All right. Sudip, Avinash thinks that 2025 the year will make investors work to make that alpha they'll have to work harder. They'll have to focus on stock picking, sector selections. What are the sectors that you find particularly attractive at this point in time, considering that even though markets have fallen by about 8%, some of these momentum driven rallies, stocks and sectors that we have seen, they have corrected quite significantly, 20% in some of these cases?
I think I already mentioned about one sector, companies exporting to US and other global markets. I think differential tariff will make Indian exports attractive. So one should definitely look at export sector. The second space which I have been structurally positive is on power and power ancillaries. There is a structural change in this space, and I believe that this sector will continue to attract investments and do well. The third, of course, is standalone company, but I still mention Reliance Industries. I think it's grossly undervalued to my mind at this stage, and there are significant value unlocking opportunities as far as this script is concerned. So that's the third. The last one I'll mention is a pretty contrarian stuff, but FMCG has suffered for quite some time. Initially, rural demand was subdued, then urban demand is now subdued, and FMCG hasn't been performing well. But in a country of 140 crore people, at some stage, urban demand also is bound to pick up. And some of these FMCG companies are very well managed companies. So from an investor's portfolio, if you are a long-term investor, some of the good FMCG companies definitely should be included in your portfolio.
Avinash, same question for you. What sectors do you like at this point in time, sir?
I think this year the monsoons have been good, so I think we are probably looking at better numbers from agrochemical, from two-wheeler companies, because I believe that these kind of sectors are going to benefit from better rural demand. And I think even the automotive sector, selecting bets like Mahindra and Mahindra, like recently they have launched electric vehicles. I think one of the best stocks in the sector, where I think the company has been managed very well. And I think you're going to see a lot of excitement on the electric vehicle sector, where M&M is now going to directly, compete with Tata Motors. So I think, these are the companies where I think we would like to, be invested. Of course, there are other interesting sectors like real estate also, because I feel that real estate as a pocket also offers a very good opportunity. Now with the Maharashtra chief minister likely to be finalized, I think you could see a lot of action in the state for real estate players also. So I think, typically real estate, for that reason, automotive companies, agrochemical companies, two-wheeler companies, I think these could be good bets, in this kind of, fallen market.
All right, those are the sectors to pick, and those are the sectors that are in your interest. Gentlemen, thank you for giving us your time. Mr. Sudip Bandyopadhyay, Group Chairman, Inditrade Capital, and Avinash Gorakshakar, Director of Research at Profitmart Securities. Thank you, sir. Always great speaking with you guys. And with that, it's a wrap on this edition of In Your Interest. I'm Suyash Maheshwari signing off.